Welcome back. How about that? Say what you want about Donald Trump. He loves to make money, right? And we're starting to reap some of the rewards of his tariff plans as the U.S. tariffs take in. The tariff that we're taking in surged to $31 billion in August, setting a new monthly high for 2025. So how do you like them apples, right? So far, so good. The U.S. could collect as much tariff revenue in just 4 to 5 months this year as it did over the entire previous year. So I guess you'd say we're off to a pretty good start, right? Total tariff revenue for 2025 has reached more than $183 billion, according to the latest customs and certain excise tax data. The surge in revenue coincides with the federal appeals court ruling that President Donald Trump overstepped his authority by using emergency powers to impose sweeping global tariffs. Now, personally, I think he's on good standing here, but we're going to have to hear what the courts are going to say about it. In its Friday decision last week, the court said that the power to set such tariffs rests squarely with Congress or within existing trade policy frameworks. Now, the ruling does not affect tariffs imposed by other legal authorities, such as Trump's levies on steel and aluminum imports. Attorney General Pam Bondi announced the Justice Department will appeal the decision to the Supreme Court, but in the meantime, the court allowed the tariffs to remain in place through October the 14th. So, well, my next guest, he's got to stay on top of all this stuff for his customers. So please welcome to the show, Mr. Craig Bolanos, coming to us from VestGen Wealth Partners. He's the co-founder and wealth advisor there. That's up in Chicago, my old haunt. Thanks for being on the show, Craig. Okay, so a little bit of a curveball last Friday. They said he didn't really maybe have the power to do what he did. Now we're going to have to see what the Supreme Court says. But you have a lot of customers that may or may not be affected by these things. What say you?
Well, listen, it's not just the client base that we serve, it's every citizen in America. So when that decision came through 7-4, struck down by the lower court, I know some people acted surprised. The reality is this was always going to the top dog. It was always going to the Supreme Court. We're going to see what ends up happening. But Scott, we did bring in like $31 billion worth of revenue, I think, over the last handful of months. I think there's a lot of people out there who are wondering if they're going to be seeing tariff dividends or tariff rebate checks. I still think that's a terrible idea. That's not going to happen. Ultimately, we'll let the courts do what they do. But for the time being, the market's focused on one big thing. It's not just tariffs, it's on jobs. And I guess we're going to learn a lot more about that tomorrow morning, aren't we?
We sure are. And so we just had Adam Johnson on, and Adam did some social media things this morning saying, you know what? Tariffs aren't really the big, ugly thing that we thought they might be back in April the 2nd or April the 8th when we set the lows in the market. And the market's gotten much more comfortable with, say, the average 15% to 18% tariff that it looks like we're going to settle at across the board. We'll see, obviously, what the court has to say. But in the meantime, you've got Scott Bessent saying that we look to maybe bring in, he initially said $300 billion for the year, but it looks like he said it might stretch to, say, $500 billion. That's some pretty good revenues for just taxing some of the things that the U.S. Consumer wants to buy from these overseas producers. So I'd say this. It's not a bad little money earner, and obviously they think that it can grow from $500 billion, by the way, that there might be a few folks out there looking. I agree with you. I don't like this dividend check either, but that's going to be something that we're going to have to talk about, the dividend checks coming from the tariffs.
Well, we're going to have to talk about where the revenue raise should come from. And if we're going to be raising revenue, I think we should be raising revenue to pay down debt unless there's other ideas that people end up having. And no, I mean, I'm happy you made the reference because where we were at on Liberation Day with the concept of reciprocal tariffs that were going to be based on trade deficit, currency, all these other things. I mean, listen, we were staring at 45 to 55% numbers in a lot of countries. That's a lot different than where we sit today with all the carve-outs for specialized goods and services that come in, and ultimately an 18% effective rate. At an 18% effective rate, clearly the market's comfortable because the market's a great barometer for the efficacy of these decisions. And it's just interesting because there is still inflation out there. Everybody sees it. Everybody feels it. I'm going to be really curious once we get further into the month of September and into October, when we get those Q3 numbers, to see what the inflation is going to be on certain goods and services. I'm thinking about what are toys going to look like for the holiday season in particular.
Okay, you make some great points there. I wanted to bring up a few things. Now, I would say this. We just had a guy on. He's a stock picker, Adam Johnson, right? He runs a stock portfolio. You do something totally different. Yours is tailored to families and individuals, specifically for their needs and their risk tolerance. And I would say maybe with a broad brush, you're looking after their retirement, their education, and maybe their health money, maybe those three big things. That's really what you're going to concern yourself with, I think. And so then, if that's your concern with your customers and their capital, how much does that inflation story play into how you handle their capital? How much does tomorrow's move with interest rates play into how you handle your customers' capital?
Well, it's a very big deal because, I mean, there's nominal versus real returns. And I think what everyone's concerned about is real return investing, right? What is your return net of inflation? And a big part of what we need to do is future-proof everybody that's a client at VestGen Wealth Partners. And that's a focus on various types of inflation, Scott. I mean, one of the types of inflation that doesn't get discussed enough is currency. I mean, think about this. The US dollar doesn't buy as much as it did back in January. I mean, what's the dollar versus the euro? A dollar's buying like 0.86 today. I remember it was parity not that long ago. So a big part of what we're doing is putting in place steps to future-proof people's retirement. And that means protecting them from currency fluctuation, not just the everyday inflation that we experience at a retail store.
And the last thing I'll ask before we go is part of your handle, your Twitter handle is get retired and stay retired. How often do people get retired and then can't quite stay retired? What happens there? What puts them in that position? You got about 60 seconds.
Well, here's what happens. It's not going to be clients of VestGen Wealth Partners because we have a disciplined, systematic, repeatable process that's been TNT, tested in the trenches. But where I see people fall short, Scott, is they have enough income, they have enough money today, but they're failing to account for the silent killer in retirement, which is inflation, not hypertension. We can take a pill for hypertension. God knows I know. It's inflation. And when you think about the fact, depending on where you live in this country, your property tax bill is going to double. Your health insurance cost is going to double. Other costs are going to double or triple over the next 20 to 30 years. And if people don't have a plan to double or triple their income in retirement, then to be honest, Scott, they don't have a plan at all. And it's that very simple thing, that very simple concept, future proofing for all forms of inflation, that get people into trouble. And that's what we're here to solve. That's why it's not just get retired. You got to make sure you stay retired.
Great stuff. I was just on a speaking tour across Iowa. A lot of folks mentioned your name. They love what your common sense approach to looking after folks' money. I appreciate you coming on, Craig. Can't wait to hear what you got for us next week. Great content as usual. Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners.